Hi friends, this is Martin from Secrets, the channel for learning about trading and investing, and we are here at another new episode of Markets tomorrow, January 27th, Thursday, 2022. That's tomorrow, and today happened to be Republic Day. Happy Republic Day wishes to all. So, this is a daily market analysis show that we normally do at night and publish at the night. So, since it's a holiday today, we are publishing it a bit late for tomorrow's analysis, right? So, what did we have yesterday? It was that cat bounce that happened, or is it a bottoming out that happened? We will analyze and then come to some conclusions if possible, right? So if you're not subscribed, please subscribe and share to your friends and colleagues so that it benefits all of us. We have very few subscriptions, no? So this will keep us motivated if, with your likes and subscriptions and comments and all feedback, right? So pre-market analysis for January 27th, Thursday and expiry. That's what we're going to do. Do the technical analysis based on all of these parameters that you see on the charts to the left. And we would have additional data analysis on all the parameters that you see on right. We will have some actionables, real recommended trades topics, whatever we call it, and then we'll wrap up with a view, my view basically, right? So let's look at the charts. What you see on the left side is Nifty and the right side is BANKNIFTY. It's a clear bounce, right? It's a clear bounce that you can see after the nearly 500 point fall that happened the previous day. We have a dead cat bounce. Most likely, it's obvious to think of it as a dead cat bounce because it was a big fall. It was 8.5% of fall from the top. And Nifty it's about 12%, I think. 6.5% of fall from the top. And that's the bounce. So obviously, it's natural to think or doubt whether it's dead cat bounce or not, right? Whether it is bounce or not, we look at the analysis and see, and for us, we'll have to wait and see for the next day. So this is what happened yesterday was at 2.5% of bounce. Nearly 2.5% and more of bounce is what happened from the bottom. That's at bottom is 17,800. Right, and then remember that it had fallen off 8.5% the last several days, and that's after that we see that bounce here, and finally it closed not 2.5% up, it closed at 0.75% up from the previous close, if you see. Similarly, and it's a wide range bullish candle, no doubt about that. BANKNIFTY similarly, it bounced up 3.5%. The bounce from the bottom is 3.5%. But remember, it had fallen off 6.5% from the top. If you see this candle, this is a 6.5% of fall, and then a bounce of 3.5%. But when it closed, how did it close? It closed 2%. 2% of BANKNIFTY is 760 points. So it closed 2% up with a wide range bullish candle. Again, at a 36,400 support. Here, Nifty also wide range candle at a bounce from a support of 17,800 levels. Intraday, this is the price action that happened. It dipped almost 1.5% on BANKNIFTY and Nifty, and then it bounced up. There was some sell-off that happened in 10 and 11, and then it was trending upside. And same as BANKNIFTY, it was a dip in the morning, the opening, 1.5% of dip, and then it caught up and then moved up. But the sell-off happened at 10, 11 that time, and then it was trending up very well, much better than the Nifty. This is the intraday price action that happened. Now what remains is the band. It's a Bollinger Band analysis. Bollinger Bands, you can see that the volatility is high, obviously because the distance between the median and the upper and the lower bands are high. Same with BANKNIFTY also. BANKNIFTY had slipped off the median and the lower part of the lower bottom of the bands, but it has not turned bearish as per the Bollinger Bands. And this is Nifty we are talking about, and it was bounced up from that exact levels. So remember, it had turned bearish earlier, here at the previous swing low. It has not gone to that. It has bounced right now, and there is some contraction of the volatility that is started, and sideways is what we can. Sideways with volatility is what the summary is. And it is the same. Contraction has happened, but not much of contraction because the volatility is still very big. and sideways is what the immediate interpretation that we can make from the bands, but with high volatility. So that's the view. That's exactly is recorded here, right? Sideways, volatile, and Bank Nifty is more bullish. How does that? Because it is closed above the 20 moving average, the median of the Bollinger Bands. So Bollinger Bands also says that Bank Nifty is more bullish. Support resistance levels, if you see, it has taken support of 17,000 to 17,050, that range, and then it has also taken support and closed about 17,200 and 7,300, and now the resistance upside is 7,350 to 7,400. If that's broken, then 7,500 to 7,600, which is a Fibonacci retracement 23 levels on the Nifty, and above that you have 17,800 and 17,850, and then 18,000 rounding number. Similar to the Bank Nifty, it has taken a support and bounce from the 36,100 to 36,700. Fibonacci 38 support is where it has bounced from. And above that, you also have support where it is closed above it, 37,300 and 37,400, which is Fibonacci 23. So Fibonacci 38 and 23 both are taken out. And then it is resisted at 37,700 to 37,800 at the top side. That's taken, then 38,000 would be the big hurdle. If that is closed, and then 38,500 is the level, and above that you have 39,100, 39,000 rounding number kind of levels. Above that, if 39,000 also is taken, then you have 39,500 up to that range. So similarly, below support of 36,300 and 36,700, if it is broken, then it goes to 35,600, 35,900, that range, and then below that you have Fibonacci 50 retracement level of 35,000, which is also crucial, right? So that's the resistance support of the Nifty and the Bank Nifty. Moving ahead, momentum. The price momentum has slipped to the bearish zones on the Nifty, as you see here below 40, and the momentum is it's sideways on the Bank Nifty, as you can see, and so what you can see is Bank Nifty also, this is Bank Nifty, that's also sideways. So the medium term, both are sideways. Medium term is a weekly candle. Momentum is sideways overall, we can say. Divergence is not very reflected, very important, because it has already completed the target. We had identified that there is a 10 bar weekly divergence, but the week is still not completed, so that's why I'm showing this. So weekly divergence is when the price is moving up and the momentum is dipping, and that's exactly what happened, and it had met the target of 17,000. It has come there, and then bounced up. So that target is that bearishness is probably over with the bearishness due to the divergence in the momentum. Now coming to the trend indicators using the ADX, if you see that the trend has crossed over the bear zones in the Nifty in the short term and the long term, and you can see that the bearish trend is increasing with this trend indicator of ADX. This is a directional movement indicator, and the ADX is a strength indicator, so showing that bearishness is increasing on Nifty. And Bank Nifty also, it is in the bear zones on the short term or the daily time frame, but it is not increasing. The strength is not increasing because the green indicator is coming down. Now, medium term, so right. So that is something that we have to keep in mind. Volatility VIX has cooled off after that cool off has happened after 28% of up move spike. Look at this spike that happened, 28% spike. Right? That means from 18 level to shoot up to 24 kind of level. So 28. So obviously a cool off happened and it is settled at the 21.35 levels. No? So that's a new range formation looks like. No? So that range could probably be 24 and 20, could remain like that till the budget or after the budget, you never know. But there is a new range formation that probably is happening. So the top of that, as of now, it's 30. It's 24. You never know what is where is the bottom, no, unless it moves like that for some period of time. So VIX is at very high volatile regions, so you have to be very cautious. Spikes can be reversals and all that can be very sporadic intraday in the swing. So everything could go wrong at very high VIX levels, so you have to be cautious. It has cooled off a little bit, so hope it cools a little more further and then comes under the 20, then it's relatively safer to play in the short term. IBP is still 80%, very beneficial for the sellers. Obviously, the budget is coming, volatility is increased to the top, and then the cool off happens means the IB crush benefits would come in for all the players with the options. IB is 21.2 implied volatility of the Nifty. Right, so that's what volatility is talking about. Now coming to the open risk analysis, this left side what you see is the OI data analysis, OI data for the Nifty and then Bank Nifty. So this is interesting to see that the highest put writing is seen at 16,000. That's 1,300 points away, and the highest call writing is seen at 18,000, which is again 700 points away. So there is slight bearish thinking that is there in the market participants, especially in the option plays. And I think that there could be a chance that it can dip up to 1,000 points also before the coming expiry within 5 days. Right, so that's why the put writing is seen at 16,000. Highest put call writing is seen at 18,000. Right. You also have put writing seen at 70,000 and 70,500. Right. 0.71 is the put call ratio, which is kind of not bullish but not bearish either. So it's more towards the bullish side is what the Nifty put call ratio is showing. And short covering on the futures open interest is positive. It's bullish. People who are short are thinking of taking long positions. Not thinking, actually started taking long positions is what I guess. This is more bullish. Bank Nifty is even more bullish. 1.1 of put call ratio is definitely bullish, and long but is what happened in the futures open interest also. Now Bank Nifty sees that a good support at 36,000 and 38,000 is where the maximum call rating is there. So that's again at 2,000 points of range. Right now it's at 37,500, nearby range, and then but not people are not worried that much on the Bank Nifty. That's why the range is less. 36 and 37, 2,000 points is not big for Bank Nifty. Right, so it's kind of more bullish definitely on the open interest levels. You have to correlate these levels with the levels that we have found in support and resistance and take calls for the positional or swing trades, whatever. Right, so that's open interest data. Yes, the greenery had come back yesterday. Right, so you can see that big buy has happened in the Axis Bank and Tex Bank and Maruti. So and Airtel also and Tata Motors also. So right, otherwise some banks did well. Kodak and Axis did well, but the main players HDFC, Infi, and Reliance, and they didn't. So IT did not perform well, did not support well. If IT had also supported well, then market would have clearly outperformed. But without IT support alone, just because of Axis and Maruti and IndusInd Bank and Kotak SBI, market shot up. So big bang has happened mainly in the banks, major banks, and the auto Maruti. Sectoral performance, if you see, it's like 13% of fall off has happened in the IT last 20 days. Right, so short term momentum is still bearish, a lot of weight. Metal, yeah, IT actually closed flat on last trading day. Yesterday. Metal closed green, 1.2% up, but momentum is again sideways, so I had to wait for it to catch up. Auto also closed green, 2.3% up. Tata Motors did well. We saw that in the previous slide, right? Maruti also did well. So obviously auto shot up 2.3%, but momentum has to catch up a bit more. Pharma has closed green again, 0.72%, but momentum is bearish zones. FMCG 1.2% recovery, but momentum is still in bearish zones. Realty also recovered now 2%, but momentum is bearish zones. So momentum is sideways only in auto and metal as of now. So if at all there is little bullishness, it is seen in metal and auto. Right, rest of all are bearish momentum. So you don't even think of getting into it. So top down approach and picking up the stocks. As of now, we'll have to wait for the momentum to walk. Work in the little more before we can confidently take it. So institutional participation, if you see, look at this. Yesterday's selling was 7,100 crores of selling has happened from the foreign institutions, and domestic institutions did big buying of 4,500 crores, but that's nowhere as compared to the 7,000. So rest of the 2,500 crores of buying is coming from the retailers anticipating the budget or Fed call or whatever. So retail participation is also big. right? So it is not the domestic decision alone that moved the market up, but big buying happened from their side. But what is worrying is no, Fyers are selling 7,000 crores a single day, which is really a concern. Going ahead, are we going to do that or post the event they would finish it, or when do they stop this heavy selling? That is what the question is. Dollar index, if you see that on the right side, it is spiked up the last several days, and then the other few days it is kind of consolidating, not making the big moves. But USD INR currency pair, if you see, it has taken a flight up from the support zone and then going strong up, which means rupee is weakening basically, right? Now, the even more worrying thing is not that, it is that the crude oil is not ready to come down because of global news factor floating around that probably, but it is at 85 kind of range, which is really not good. But it seems like the momentum is very high and there is some kind of flag pattern also, so that gives an indication that it could break out further up from here to crazy levels above. This is worry number one. Now, gold on the hand, when the markets fall down last week and the US markets for dollar is rising up and US markets are down and all that, so that time gold is trying to break out and it has successfully kind of broken out of the trend line. The trend line channel has to be shifted probably a little bit, but the real resistance is coming at 1876 up above. So, but no, this is part of a cup and handle on the weekly of the gold. So, long medium term, it is bullish gold, but the momentum has caught up into the, or the short term has caught up into the bullish once again. So, there could be a chance that it can at least attempt to break the 1876. So, the moment it breaks out of that, probably yeah, only then you can confirm that the breakout release happening in the gold. But it was a slow momentum that was a problem with gold. That momentum has picked up now. Now probably it can break out, right? Is what the charts are saying. No, it has attempted it multiple times to hit the top of the resistance 1870s and then fallen down. Now, US markets, we had already seen that there was a big fall that happened, and that small green was there the last day of trading yesterday, and therefore also small yesterday basically. After the big sell-off of 10 to 15% of fall that happened, some greenery was seen, but whether it will sustain or not really depends on the outcome today evening of the Fed, right? So global markets have attempted to bounce up and then turn green, but never know whether it will sustain. We'll have to check all of these Dow Jones, S&P 500, and Nasdaq, right? And the global UK markets, DAX, CACs, and all of these. So how do they reflect or how do they react to the Fed meeting outcome? Is all that world markets are looking for. So are we. Two actionables. Power Grid Corporation is doing good. It's well within the trend line channel, and then the volumes are very good, and the momentum is spiking out. Trend is good, and it has taken out a previous resistance zone, and there can be a good swing move to the channel top at least, right? So, so, so yeah, swing trades it could be rewarding, but even more better chart pattern that is seen is on the Mardi. You can see the volumes are above moving average. The spike out of momentum has happened. Trend crossover has happened. And this is also weekly. This is a weekly chart. The pattern is it's a multi-year resistance zone that has broken out and closed to the above that has happened. And this is the inverter head and shoulder. And this breakout could be very rewarding. First hurdle would be 998. Wrap up. Moderate bearishness continues, right? We can be hopeful, but we can only have a view based on the charts, right? Technically, charts are bearish. Although there is a bounce happening, we don't know whether it's for real or not. So, charts based view is short term is moderate bearishness. Support levels also shows that momentum trend crossover to bearish zones and institutionally heavy 7,000 crores belly. How can you be bullish, right? So, it's endless holiday today, and markets did not react to yesterday's US market bounce, and market will react to today's US market output based on the Fed meeting tomorrow morning, and which also happens to be expiry day. So it's going to be interesting and exciting expiry and the trading that is going to happen. But good luck to you if you're already long, taking long positions. But intraday, you'll have to wait for the first half an hour and then see the market and then take your view. If you're playing the intraday, even for swing trades ahead, keep a view that is formed today, but see how the market reacts in the first half an hour tomorrow and then take the trade. So reasons, obviously the global cues in the US were bad, and then our market is just reacting to what the mother market is doing, right? Dow Jones 9% down, S&P 10% down, Nasdaq 14% down. Right, same is reflecting in our markets. We just can't be a sole forever rising up market. It's not possible, right? Given that our economy is linked to the globe in many ways. So your market, US market is down, as I said before, has shown some green, but we never know if it's a dead cat bounce or a bottom is made or not. You'll have to wait, right? Form a view based on what chart pattern shows. See how the market reacts in the first initial half an hour. Wait patiently before you make the trade. Then recorrect or reform your view, whichever side, and then take the trade. The good factors as of now is that Bank Nifty is showing strength, and it has broken the 50 DMA and regained that. It has broken the 20 DMA and regained that, and it is still above the 50 DMA. So there is some bullishness that you see in the Bank Nifty. It can try the Nifty upwards. The last two paragraphs I repeat all this. So it's based on the volatility, based trading on the options, direction, non-direction, whatever. So weeks have shot up, not 28% spike, and it has gone above 24. So we have to be very cautious at these levels of high volatility, where it could give surprises and it may not react as it normally reacts to price action based trading. So careful about that. Either stay out of trading till the VIX cools off to 20 levels or below, or be extra cautious with play with hedge positions, calendar spreads, vertical spreads, whatever, so that you know what the max that you may lose if your view goes wrong. Right, so that's a view that I have. I hope it helps to form your market view for the next day, and then if you find that useful in some way, share it with your friends, and then don't forget to subscribe and share. Thanks for watching. Happy trading and happy learning. Bye.